afternoon, everybody. Welcome to the Trader Merlin Show for your Wednesday afternoon hump day. FOMC announcement day. No real surprises there. Maybe we'll talk a little bit about the FOMC statement as we progress today. But as I have been trying to do over the past couple weeks, bringing on more guests to talk about where they think the markets are headed, maybe their thoughts on, anything really to do with financial markets. So we've got a fun one lined up here for today. As you guys know, I usually try to bring him on once every couple of months, but it's been a little less frequent because he's been so dang busy, which we'll even talk about some of the things he's working on. We're going to have none other than Dr. Larry Jacobson on the program today to talk about, are you prepared for 2025? Not necessarily just the forecast or the outlook, but are you prepared? So Larry, welcome back to the show, my friend.
Happy New Year, Merlin. Another year, another season.
Another year, another, I guess, just episode of reality TV, which we call trading and investing.
Yes, that is very for sure. It's good to be back. Oh, always fun, especially with a new year. We got a new clean slate and seeing what's going to happen. And I think this is the year more than ever to be prepared. There's just a lot going on, and we can jump into anything that you want.
Well, that was my initial question. Earlier, I texted him and said, what do you want the title of the show to be today? And a lot of times I do the title, or most of the times I do, but I thought I'll give Larry the shot. And he says, are you prepared for 2025? And I thought, all right, that's a good one. So let's start there and get into why you felt that was a good topic and what are some of the things we need to think about.
Well, first and foremost, right? We have an administration change, a lot of uncertainty in the world. As much as they want to keep telling us that the plane has landed softly on the water, we just need to go to a supermarket and see the cost of food right now, gas. Nothing's really come down. Mm-hmm. The only thing now they're trying to do, as I see, is trying to convince government workers to go take packages, parachutes.
I thought that was interesting. I mean, okay, I'm digressing or starting off track, but that's huge. What was it? It's if you retire by February 6th, you have all the way through the end of September to get paid. And I mean, I could imagine a lot of people that know their job is going to get chopped are just like, all right, I'll do it. This could be pretty good.
Well, look, they're proposing a $10 billion savings by making this packages available.
Wow.
So again, it's not a surprise. We know that Trump has been wanting to gut the government. The question's going to be, hopefully they're looking at each of these areas and it's not going to affect and impact people, but more some of what I would say, the things that we know that works in the government that probably should be cut. Mm-hmm. And I'm okay with that. I think you've got a lot of fluff. I think we've got a lot of people that work for the government that probably don't do as much as they should be doing. And we're not seeing the results. So I think it's just an interesting time. That along with the fact that we're seeing this new kind of change going. It just is like this energy. And for me, why I decided this was the year, and I've been calling this, I guess I'm not really a bear per se, but I am waiting for this market crash. And I've been doing so for 15 years.
You'll be right at some point.
Well, yeah, but the bottom line is that there's this opportunity that exists to people that are in the know. Mm-hmm. So the people who are really going to be excited about the crash are people who are educated, who see an opportunity to make a lot of money, like Wall Street did back in 2008. In fact, we could look at numbers and Goldman Sachs made more money in 2008 than they did in the entire 10 years prior combined. And so to me, it's kind of a plan of, one, do you know when this is going to happen? And are you prepared to take action? I think that's the most important piece. Secondly, if it does turn over, why couldn't we be making money on the way down? And more importantly, what I've been working and we've been talking about, it's hard to believe now, it's been 10 years, is value investing.
Yeah.
And there are going to be a bunch of stocks that are going to be on sale. And if you know what you're doing, it could be an amazing opportunity. And, it's interesting. I did tell you, and you never asked me why. The other night we were talking about just value investing, and I made a statement. I'm going to see if you remember what the statement was. I said, oh, boy, I blundered. You remember what I said?
You put me on the spot there. I don't.
I said, I blew one of Buffett's rules.
Oh, yeah.
Remember?
You did say you blew one of Buffett's rules.
And what that is, and I didn't really understand it, but I've been doing more and more research. Warren Buffett and Charlie Munger hated diversification. They think it's one of the stupidest things in the world. Mm-hmm. And the reason they say so is why are you going to spread your wealth among all these different things when you can find two or three things that are going to do really well over time? And why aren't you investing more money into those things? And the reason I say it blunders, it's been, rather than doing five or six things, we've been looking, or I've been putting on this list, it's probably up to about 25 things. So I went a little overboard, but for me, it was also testing the theories, seeing how these things are working. And some have worked really well, and it's doing kind of what it's supposed to be doing. So it takes about 3 years for the markets to kind of catch back up with these undervalued stocks. But I'm just going back in my mind's eye and thinking about 2009 and the fact that you could have bought Amazon around $70 a share. We could have bought Apple around $12 to $14 a share. You could have bought Netflix at around $8 a share, and we didn't. And so, I am waiting and I'm not going to miss this opportunity again. And one of the things I'm kind of grateful for is I know what to look for and what I'll be going to when that particular scenario happens. So there's always this anticipation, but I think from what we're seeing in the markets, and I know you're going to have Bill on tomorrow, so it'll be interesting to see what he thinks. But from what I've seen in a little bit of history that I've done, the hairs on the back of my neck are standing up.
Right. Yep.
Everything that has happened in the past is cycling again. And now the question is, will the same thing happen yet again? And honestly, I'm hoping it does sooner than later.
You have a lot of these pieces that may happen again. We have a lot of stuff that's, of course, very different and maybe it has not been done. As someone who kind of looks at the longer term picture and says, I'm building a portfolio, I'm thinking about, years away. Do you look at actions? You start off the show talking about President Trump's latest thing about, government workers. You want to step down? Great. You're welcome to. Here's the package. That's kind of unprecedented on such a grand scale. Do you look at info like that and say, okay, if this does go through and everything works out the way, how is it going to impact these markets in 6 months, in a year, in 2 or 3 years? Does that factor into your choice when you start to allocate your capital? Because to me, it seems like there could be a whole potential new slew of problems that arise years, maybe a year down the road from all this.
Well, the big question is what exactly or what sectors are going to get hammered.
Right.
We can all sit here and try to predict, but it won't be until these policies start to go into effect. And to me personally, it's, do you believe in the company? Is this a company you'd want to own regardless of the economic situations? Is this a company that will continue to do well and grow over time? And so remember, to me, if I'm going to follow Buffett's tenets, he's looking at stuff 5 to 10 years from now. He doesn't care what's going to be hot in the next year, 2 years. So for me personally, what I do is I first need to see what sectors might get hammered. That might lead me to a stock that's gotten hammered down. The second question is it going to matter? Yes, every stock is going to get broken, but if the company's still good, and we've seen this over and over and over again, the company tends to rebound and even better. And kind of my study on this is Microsoft. And it's in my mind because I've done this presentation so many times. But prior to the 2008 crash, Microsoft stock was selling around $60 a share. Now, that's nothing compared to today, but that was big relative to the time. And what was fascinating was it was so overvalued compared to where the stock should have been trading in the 30s that people were almost paying double of what the company was actually worth.
Right.
And then when I go back and see what the price was after the crash, it went from 60 down to $12. And imagine buying it at 12 and now it's around $600. So again, it's a question of, do you think this company is in the right business? Are they with the right leadership? Do they have enough competitive edge to control the market share as things start to turn? And then finally, to me, is this a company I'd even want to own? Because I'm going to be an owner in theory, at least for several years until we see something change. And to me, if this is a company that's paying dividends, not only are you holding it and you're getting appreciation, but you're getting paid dividends as well. So that's where I think over time, the long-term investing, and we've seen this, And sure, could things change? But here's something that never does, Merlin: human nature,
Yeah.
right? So we know, is anybody out there really thinking that if there was going to be another crash, more garbage is not going to come out than it did in 2008,
Yeah.
right? We now have more money out there. We have more people that are able to move money around without people noticing. The world has become zeros and ones. That's it. A lot easier to steal. And I think we're going to find that there's a lot of money out there that was taken, and it's going to take yet another crisis to allow Lake Mead to appear again. That's what I call it every time there's a crash. There's Lake Mead halfway through the crash, which is where the water's going to recede enough that we get to see all the garbage that the banks and institutions have been doing. And then it unravels. And if you know, you've been kind of studying the markets as much as I do. Happened in the late 80s.
Hmm.
It happened with the dot-coms. It's happened with housing. And you know it's going to happen again with AI and all the technology going on. And I kind of feel I'm smarter now than I was then, in the sense that I'm not going to not want to invest. Like, think about it. We invested in the 80s in Microsoft or Apple or all these technology companies,
Yeah.
and what that would be worth today. Well, same thing's happening now. And to your point, and you've brought this up many times, until we find out who the Betamax is and the VHS
Yeah.
of these new technology companies, you got to kind of diversify if you're going to speculate. So you have some money riding that could be very good,
Yeah.
or you're going to find stocks of companies you want to own because they're going to continue to innovate and be leaders. And I don't think you and I, back in 2015, sitting together at the power trading radio table, we're going to look at each other and said, this company today is going to be the number one company market cap in the world,
True,
right?
and that's very true. However, unfortunately, all those episodes were taken down from Power Trading Radio.
Yeah.
You did say that this is going to be one of the leaders in driverless cars. They're going to be innovative and one of the kings of technology. You did say that, and certainly there is that technology. That's not their focal point, obviously. It's not the just driverless cars, but now their AI systems are powering a lot of those driverless vehicles. So, it did meet those objectives, but much, much, much more. With the "Are you prepared?" statement for 2025, what sort of things are you doing? Obviously, we've got big changes. It's interesting. I'm sure you've experienced this as well. You're in the Midwest now, which makes it probably a little bit different than me out here in liberal California. I have people who are losing their minds. They want to sell everything and move to Canada. I have some people that are just, this is the greatest thing that's ever happened. I really don't care. I think it's just opportunity across the board. How are you positioning yourself? And you be prepared. Like, what are you looking forward to or anticipating happening this year?
Okay. Great lead in. Can I share some of the stuff I was talking to you about?
You got it.
So
Anytime.
let me just go ahead and double
Just
share
keep that
here.
OnlyFans page private. We don't want to see the OnlyFans page. Larry's got an OnlyFans page now. He's crazy.
Yeah. And I'm the only fan. All right. So this is kind of what I was thinking here. Can you see my screen okay?
I can. I'm going to make you full screen. There we go. Yep, we got
Okay.
you.
So you actually always kind of inspire me indirectly into starting to do things. You and I have conversations, we talk, and it was a slide that you built a couple of years back that I kind of looked at, and then it set me on my own journey. So you might remember this slide here. You built this.
Yeah.
What's the difference between the 10-year and 2-year treasuries?
Mm-hmm.
Now, interestingly enough, and I think you might agree with me on this, having the proximity to Bill Addis that you and I have been allowed to have has really changed my opinion on bond market.
100%.
And just some of the things we've seen that have been kind of unprecedented in our lives, like, yes, but I was much younger in the late 70s and early 80s when you had very large inflation. And we really haven't dealt with that in our lifetime since the late 70s, early 80s. Well, all of a sudden, we start to see all the manipulation and things that have been done to try to preserve the mess. I mean, that's all we've been doing, putting Band-Aids and rubber bands on. But this was the thing that you really got me thinking about. That you said, every time we've seen one of these kind of gray, bars, that usually has been the foreshadowing of a recession. So notice there's this zero line here on the chart. We're comparing the 10-year to the 2-year. And when the 10-year is cheaper or paying less in interest than the 2-year, we see this, comparative yield curve go below the zero line. Now, what was interesting to me is the next thing you did and said, well, here's the recession. So these bars that are darker are actually the recessions that led to the crashes. Every single one of these recessions, followed by the inverted yield curve, resulted in a crash, right?
Yep.
And fair to say, so I went a step deeper. And I said, is there a pattern that I have been seeing in looking at these different setups? And to be honest with you, I haven't seen this in a while, but let's look at it. Okay.
Yep.
So this is the actual recessions, and this is actually the chart that I put together. And we can see here in the late 80s, this was the inverted yield curve. Here was the inverted inversion. Here was the inversion. Here was the inversion. Well, there's a couple things that are different to me now than there were previously. One, notice how much wider and longer the inverted yield curve was this last time compared to the previous three. And this is just the flash crash of COVID,
Right.
right? The second thing is look how much deeper the inverted yield curve went than in the previous past. So I went deep and I said, is there some way that we might be prepared for what could come next? And so here is a little bit of a breakdown of what the dynamic yield curve and what the chart looked like in the year 2000. So on July 25th, 2000, the yield curve went inverted. What does that mean? It means that the longer term bonds are paying less in interest than the short term bonds. And why does this tend to happen? It happens because interest rates go higher. And as a result, the Federal Reserve can only control the short term interest rates. But when they start to go above, and think about this, right? It makes common sense. If I could loan my money to the government for a year and make a higher rate of return and interest than giving them my money for 10 or 20 years, it's kind of a no-brainer.
Mm-hmm.
But what the pattern has been is it's gone from inverted. December 4th, it went flat. And then on December 27th, it went normal. So what I started to notice is when it goes from inverted to flat to normal, it has led to a crash. Well, we know what happened that followed in 2021. The tech bubble burst, and we can see the crash that followed. And it was after this yield curve went normal. Well, so I went ahead and looked at 2008 crash. Same thing. In March 3rd of 2006, we had an inverted yield curve, which meant that the shorter term interest rates were paying a higher interest rate than the long term bonds.
Mm-hmm.
And again, we were toward highs in the markets. May 27, 2007, we went flat. And then we had here in December 21st, 2007, we went normal, followed by the crash. So you start to see this pattern here from inverted to flat to normal. Now, here we are.
So that's your trigger. So your trigger is you go inverted, flat, and then once we get back to normal, that's when you start to get cautious. Is that what you're saying?
Correct. And notice the other interesting thing that in all of these crashes, the normalcy happened in December. So here we are on July 5th, inverted yield curve, following one of the longest inverted yield curves, by the way.
Right, yeah.
December 9th, flat. And here we are on December 30th. It wouldn't let me go back, but on December 30th, it went normal. So here I am going, let's just confirm this, right? December 21st, December 27th. So isn't it interesting that the inverted yield curve tend to happen in the summertime-ish, flat tended to happen a little bit later, and before the year end, we went normal. And you'll see the same thing here, March, May, normal. So what this means to me right now is pay attention to the charts. Okay, because could I be wrong? Absolutely. But this is too predictable from what's happened in the past. And I'm sure if we went back into the 90s, if we can get the data to go that far back, probably the same thing. So this has got me kind of on the edge of my seat saying, Larry, I can't predict when the crash is going to come, but maybe it's going to happen. And so this is really what I'm focused on right now. And we are back to being normal. And notice, same thing. And notice how this has come almost back the same time it's done the last three. And then the crash has come.
Mm-hmm.
So this is pretty recent.
And I've never looked at it from the perspective of time. Obviously, there's a lot of historical data that talks about when we're inverted and we come out of the inversion, there's a lag time, and then we start to see the markets respond to it, typically in a negative way, and we get a big crash. However, I never put the numbers down to the dates. On all three of those examples, when that market went back to a normal yield curve after being inverted for whatever period of time, was in December. That's interesting because it kind of lines up perfectly with what we have now. To add to that, just get your take on this real quick. If you look at the current situation, it seems like everybody and their mother is very bullish on the economy right now. We're seeing big expenditures. You got Trump saying big AI expenditures, and even crypto legislation help boost the economy, jobs coming back, and all sorts of different factors to it. It seems to me that most people are expecting this to be a gangbusters year because of the change of administration and new policies. Do you ever look at it from the perspective of when everyone's looking to the left, you should start looking to the right?
Yes. In fact, I want you to take one more piece of information here. Right here was the handoff from Bush to Obama. Right here was Clinton to Bush. So you notice these things have also tended to happen around 5 year or years of 5 or 0. Have you noticed this as well?
I have not, but I do now.
2000. This is the only one that was a little later. Here we are in 2005, and it tended to happen through a regime change. So here's my take. Number one, and I can be kind of convinced of this, but someone's going to have to give me a very good reason. How is giving more tax cuts going to stop the bleeding of the printing press? And there's another thing that we have to look at right now, whether we agree or disagree with the policy. How much is it costing us to deport somebody compared to what it was costing to house them? So at this point, how many millions or billions of dollars is the Trump administration going to spend to clear out this problem? And is there any kind of proof that once this is all done, it's going to make things any better? So that's the one thing, that we're already in a scenario where people are complaining we printed too much money. And how are we not going to print more money if we're now going to cut taxes and have less revenue coming in? Second thing I've been noticing is with all these tariffs, okay, there's going to be retaliation.
No.
And what is that going to do to...
No, wait, Larry. They're just going to lay there and take it. Come on. They're going to be like, oh, okay, sure, of course. Come on.
So where do we think people are going to get hurt? Is it going to be the people at the top, or is it going to be the people in middle management, people that are in manufacturing, the common person that voted because they believe things are going to get better? So I think right now what we're really looking at, Merlin, is this idea of until it happens and we see these things go through. Because right now he can sign 1,000 executive orders, but if they're unconstitutional, they're not going to go anywhere. Like right now, he signed 2 of them that are already inciting lawsuits. And again, I'm not taking a side on this. I'm just looking at it from the perspective of what will these policies do?
Right, anticipating.
Is it gasoline on a fire that's already been there?
Yeah.
You know what I'm saying?
And it, doesn't, and it, we just don't know. Chad says, and the flip side, what's the flip side of the argument? The flip side of the argument is that everything works absolutely perfectly and this market just runs on all cylinders, and all of a sudden our economy is doing better than it ever has. GDP growth is absolutely surging. We repeal you saw the thing about repealing all state income taxes, income taxes, and just using that in tariffs, and that goes without a hitch. We all have a ton more money that we can spend, and that just creates a flourishing roaring 20s kind of market. Is it possible? Sure. I would say that's just as possible as having a catastrophic market collapse. Those are if you do a bell curve here, those are the outliers. And
Right.
the challenging part for us as traders and investors is how do we find the highest probability of outcome here, right? That's the trick I think we all have to figure out.
And it's going to be through trial and error. I mean, let's face it. There are things technically, and this is where it's a little tougher. There are things technically we can look for on charts that we've been used to looking for. But what we don't know is what, if any, technology is going to do to this process.
Yeah, right.
See, it's a very different world right now. Like where I think we're about to head, and I think you've been doing a phenomenal job in educating people. You've got my eyes opened on digital assets. It's just anybody sitting there right now that is going to be ignorant enough to say that what we're seeing in Web 3.0 is not going to be another disruptor.
Yeah.
I don't know what to tell those people. I mean, you can wait there and we can sit there and deny it. And like there's an old saying, right? Fool me once, shame on you. Fool me twice, shame on me. And in the years of the 90s, there were people that did not get in early. Now, you learned from that. You got in much earlier than even I did on the digital stuff.
Mm-hmm.
But there are people out there that will wait too late, and they're not going to be able to benefit from the things that people who are educated and are willing to take some chances will do.
Yeah.
So there will be situations where, will I get it right every time? No. But if I wanted to say, I believe from what I'm seeing on a chart that I'm going to put on a long put and it doesn't work, I can just have a tight stop. And I can say, well, how much am I willing to lose if I'm wrong? So there's a controllable aspect to this.
Sure.
But to me right now, I'm watching the charts for typical things that would happen that insinuate a trend reversal.
Yeah.
Because that's what we're talking about right now, aren't we?
Yeah.
We're looking for things to reverse, and then we have to have the follow through. So it was amazing to me yesterday, and I didn't get a chance to watch your show. Usually I do, especially when it's on a topic that I really enjoy, which I'm sure I will.
You're a glutton for punishment. You're a glutton for punishment.
Yeah, well, here's the thing. All of a sudden, there was doom and gloom in the market yesterday, and now we have sunshine and rainbows again.
Yeah.
So all of a sudden, in one day, this miraculously reversed itself, where everyone was doom and gloom on the market. Why can't we just chalk it up to profit taking? Or why can't we just at times chalk it up to short squeezes?
Yeah.
Until we see something really change, I am just kind of riding things out cautiously, and I have to trust the trend until I can't. And I think at this point, yeah, I'm waiting for that trigger. I'm waiting for that piece of information that I've seen before, and usually it'll be on a lower time frame. That's where it starts, and will carry its way up to the higher time frames. But at this point, the information I'm seeing based on the dynamic yield curve has got me preparing and thinking, if this were to happen today, what do I need to initiate tomorrow?
Yep.
Where there's not a break in taking action. It will not, and the thing is, as everybody knows, and you know this, it's not all of a sudden that we're going to get a crash and wake up tomorrow.
Right.
It's going to take a little bit of time. The reason why COVID, I think, was a little bit different was nobody quite understood what it was. And I think there was just a bunch of people freaked out about it. Here, we know there's stuff that potentially could happen, and yet people are going to wait to that last minute and are usually going to be reactionary.
Yeah.
And those aren't going to be the people who are going to benefit in the next crash.
Yeah, and the reason I liked asking you those questions, and sometimes it opens up to too much political stuff, is ultimately you have an idea of what you think is going to happen. And everybody here watching, whether you're listening to the podcast or watching this channel and live right now, welcome everybody. If you're watching this, you have an opinion too. whether you want to admit it or not, you're thinking to yourself, oh, I think that this is going to happen. I think that if Trump does this, it's going to do this. If I think that, Biden does this, it's going to do this. And the secretary, we have these kind of domino, what is it called? A Rube Ginsburg, Rube Goldberg thing where the ball bounces here and all these moving parts. We all have our ideas. The difference, which I think makes traders successful in this, is I can come in with all the hypothesis, ideas I believe will happen. And when I'm proven wrong, I have to go, boop, shoot, I was wrong, and immediately stop and say, I'm going the other direction. Because my opinion, I have a very strong ego. I don't, it doesn't hurt me to say I'm wrong at all. So I don't know if strong ego is the right word, but I'm happy to admit that I'm wrong. And just move away from something.
You have a humbled ego.
There you go. I have a very humbled ego, and I got zero problems admitting, the people here know it very well. A lot of times I will literally just say, I'll just admit I was wrong. Sorry about that, guys. My bad. Oops. Whereas I've actually seen a lot of people on social media where they'll never admit that they're wrong, and they're always going to twist it somehow. And, oh, it wasn't me. It was the other person. Larry said it. I didn't say it. But, you have this idea that the crash is coming. Of course, I've been saying the same thing for a few years now, and it has not happened. But I can tell you this. Larry is 100% correct. Without a percentage of failure, he is guaranteed correct that the markets are going to crash. I just don't know when. At some point between now and the end of time, we will see a crash, and I'm going to be right.
And you know what? It's about just what will you do if it does happen?
Right.
Like, how are you going to take care of your retirement accounts? What are you going to do with your trading accounts? How are you going to protect yourself? How long are you going to protect yourself for?
Right.
So to me, when it comes to things like this, it's no different than real insurance, right? There are people out there that have a lot of insurance on their home and cars, and people have less insurance. And what it really comes down to more than anything is not that they don't want more insurance, can they afford it? Same thing's going to happen with the markets. That if you're going to look to protect a portfolio or you're going to look to trade, how much can you afford to lose if you're wrong, but not do if you're right? And that's kind of where my mind is going. And it started end of the year. And I've been saying to people, I have no idea when the crash is going to come. I just am feeling that we're going to see something happen this year.
Yeah.
And it could be that things just change a little too fast. See, remember, markets don't like change.
Right.
And here's a guy that wants to change
everything,
like every minute.
Yeah. Yeah, it's crazy.
So that's going to have impacts on the markets. So don't get me wrong. There's going to be some great volatility. As an option trader, I'm going to have a great year.
Yep.
Right? It'll be a lot of fun.
I'm optimistic I'm going to have a great year as well. Big Eb says, how was inflation during the last tariffs that were issued? Here's the chart of it. If you look at during the entire Trump administration, which was 2016 to 2020, inflation did go up. It certainly seemed like it was more elevated. Unfortunately, that's 10 years. Let me go max here so we can see the whole time. So that was 2016. So, there's your little blip of inflation back here, but really historically, wasn't that big of a deal. Now, this time, I would argue, is a little bit different. Saying that you're going to cut income taxes for Americans, but tax everybody, that might create a different wave. And I think that inflation at that point would be much, much higher. And now, obviously, I would love to have zero taxes on my income. That would best. I'm waving the flag, going, yes, please. But remember, with that action, it's gonna be made up somewhere else. Just like people give me a hard time out here in California, like, oh, well, you pay so much money in state income taxes. Oh, that's why I moved to Texas. I don't have to pay taxes down there. You pay property taxes, and your property taxes are significantly higher than California. So they'll always make up for it somewhere. The question is, their actions to make it up, how does that impact us long term? I think it'll be more inflationary. Gary, so the question was, what's your degree? And Gary says Doctor of Education, Organizational Leadership. Correct?
Yep. That's it.
Dr. Johnson. Jacobson. All right. So every time you come on, you like to go through a pick. And I know you would mention that you got one, but you're not ready yet to fully disclose that one. I had a question from a viewer, which I might be able to bring up here. Let me see if I can share with everybody, because you may be with us here today. And that question was from Jeff. Yes, this is the question from Jeff. Jeff says, it's ANET, A-N-E-T. Can you look at this chart on the show? I'm not sure what they do, but it's one of the nicest looking charts that I've seen. And when I mentioned that to you, you went, we talked about ANET. It was one of your picks, one of your calls. What was it about ANET that looked appealing to you, and what's your take on it today?
Well, again, and let me kind of put it in perspective. So I'm going to share my screen again, because I can bring up this other tab. Give me one sec here. And here we go. And this is actually from the portfolio that we still manage from an educational standpoint. So look at the date. This was back in 2018. And Arista Networks, we're starting to get into the game right now of a lot of what we're seeing. So what happens is you have to find companies that are going to still be able to be innovative. And so reason why we like this, or I like this stock at the time, it was undervalued.
Mm-hmm.
And we can see here in the time of 7 years, this stock went from $64.25 up to 129.17, and that's 101%. This is basically taking into consideration if you put these things together here. But, part of what I look at, and you can bring up the chart if you want, I just can't see it.
I got it.
So I don't know if it makes sense for me to share it.
If you want, I got it. I can drive. Just walk me through what you want.
I just don't know what I'm looking at. That's the problem.
Oh, I've got your spreadsheet up.
Yeah, no, the spreadsheet's up. But what I'm talking about right now is I can't see the chart.
Okay, no problem.
Yeah. So if you want to bring up the chart and talk it through, I can kind of address it. I don't have to share it, but I'll have it up here.
Well, first off, I mean, just really the chart is one of the more impressive charts. So, Jeff, thanks for bringing that up. It's been monumental. If you go back when Larry was talking about it in 2018, this thing was like $13-14. Of course, this is split adjusted. It's had 2 splits since then. I gotta love when your stock does a double split. All of it says, right. Oh, I'm in ANET. Good. Well, let's talk about it today. Larry's initial pick was back here in 2018. Now, at this point now, if you look at rate of return percentage, and I'll even be generous and give it to the to where we are today after this big drop down. Arista Networks is up 625%, roughly, right? Actually, let's go to exactly today. Sorry for dragging the screen around here, guys, but let's go to where we are right now, and that is going to be more than that. That is a 651% increase, and that's they had a pretty significant gap down a couple days ago. I don't know what that was from. It doesn't look like an earnings announcement. Before that, they were up 828% since 2018. So not bad for 7 years worth of time, over 100% a year. Fantastic. When you have those types of forecasts, Larry, you always look at the financials. You're breaking down kind of where do you see it in a series of years, 3 years out. Here we are, almost 7 years later, after you've picked this one, does it still hold true? Do you still look at this and go, it's got more upside, or has it gotten to that point where you go, I think it's slowing down? And I know you haven't had a chance to look at all the numbers today, but I mean, right. it does speak volumes of, yes, I can make a call off of fundamentals and look at the numbers, but at some point, there will come a moment where you go, nope, this is too overvalued, not enough fruit on the bone anymore, or meat on the bone anymore, and I move on. So where does ANET stand here?
Well, what they really are involved in is development, marketing, sales of data-driven information cloud networking.
All cloud.
Right. So the cloud, I think, is still somewhat in its infancy. I really do. I think when the new technology is married to the Web 2.0 technology, it's going to be one of those things. Like, I remember one of the worst Star Trek movies was the original one, and you had Voyager, where you had Voyager 1 that morphed with another alien type of sensory machine. I think you're going to have something similar here, but they're dealing with the Americans, Europe, Middle East, Africa, Asian Pacific. So they have their own kind of operating system, extensible operating system. And so at this point, because of where technology is continuing to go, I don't see a cloud networking company necessarily getting impacted unless their technology starts to become a little too outdated. Mm-hmm. And they're now also, just so you know, they're involved now with AI Ethernet switching platforms. So they're basically getting into AI as well here too. So it was kind of up and coming. It wasn't that well known. Another reason which caught my eye, Merlin, I never shared this with you, but you know why it kind of was something I wanted to buy?
What's that?
It sounds like Arista Records. Being in the music business.
Yeah, Larry's in the music industry for a while, so that I get it.
So it kind of hit me. So really at this point, as long as it's continuing to have healthy growth, year over year. See, that's kind of the key to me. If this company starts to get into negative growth, year over year forecast, and they're no longer able to keep their competitive edge, and their industry is computer hardware. So obviously, the big boy they're competing against is Apple. But, I don't see anything right now to tell me I've got to like abandon this as to maybe some other things that I might be in that are going to start to become a little more outdated, if that makes sense.
Yeah.
And that's one of the reasons why I like the chart. And also, it becomes a point where if it's undervalued, we're buying it cheaper. And then when I marry it to the technology, I mean, if you go back and you look at the monthly chart, I mean, it's crazy
Yeah, it's phenomenal.
that all the way back in 2018, we look at these charts, and it was right before that big breakout that happened around the year 2018. And all of a sudden, it started to move again. But there was a moment from when it was purchased in 15 where it went pretty sideways and didn't start gaining momentum till around 2017, 18. So all I see at the moment here, if I look at a monthly chart, is we're in a strong uptrend. Again, the question becomes when there's a crash or something happening, that's going to kind of determine whether or not I still believe in this company, based upon where the fundamentals and everything will be falling once it gets to its bottom point. And honestly, if it winds up crashing and I can buy this much cheaper, I'm going to buy it. Like right now, I'm looking and saying, if this thing gets back down to the 30s,
If it gets to the 30s, I'm buying. Oh, well, let's be honest here. Right now, you're trading at $112 in the after-hours session. If this thing got to 130, in my mind, instinctively, I would say, hell yeah, a screaming buy. But part of you's got to go, something's broken here. Like, is this a fraud investigation? Did they lie in there? Are they being investigated by the SEC? Because to go from 112 down to 30, there's got to be something.
No, that's not what happened. I'm saying if it got down to 30. Right now it's at 112.25, and even here we saw it down to 107. So it's at 107 at a close today. It's at 112 after hours right now. So it's already up. So I am thinking that there was this calculated move to do some stuff to shake up technology, and all of a sudden, big rally came the next day.
Yeah.
So maybe something spooked. Maybe they used the Chinese company as an excuse to get out, to sell off some of their profits. Because all of a sudden, it's interesting that no one's really talking about it again today. I mean, it's out there, but then a couple of people went on those sites and they found some serious issues with it. So I don't think and everyone's now saying, I don't think it's where the Chinese are purporting it to be right now. So to me, it's a wait and see. But, especially now with TikTok, more people are going to have a heightened sense of, do we really want to allow a Chinese company to come in if they're going to be aggregating the data from the app?
Well, the rumor is that it's actually a ChatGPT model. They're kind of figuring out that they've taken ChatGPT's OpenAI's source, their data set, and have modified that one, which again would be theft. But no, China's never stolen any intellectual property from the United States. But,
never. No, I never had experienced that in the music industry ever.
So Larry, the topic in chat is pretty funny. They're commenting on your background, and just so everybody knows, Larry does have an office with a teddy bear and his trophies from gymnastics when he was 12 years old. Plus, I do think there's like some Pokemon stuff or some Thomas the Tank stuff in the corner over there.
You know what? There's a history and story for everything.
There is. Love it. All right, you mentioned kind of seeing the future and understanding that things change and we need to be on board and kind of maybe allocate some capital, obviously not everything to it. You have become much more of an advocate for cryptocurrencies and digital assets. I think the more that you dig in, I think at the beginning you were kind of like, I'm not sure, and you bought a little Bitcoin, then it was Ethereum, and then it was Solana, and now you've got 10, 15 different things. As a technology, kind of as innovation, how do you see this, I guess, growing and infiltrating our current financial systems? Because it's been pushed out for a while. Now, all of a sudden, Trump seems like he's really greenlighting it. I'm curious what your take is on digital assets growth over the next, let's say, year or two.
Well, what this is going to come down to is a fight
Yeah.
because there's things that are always happening behind the scenes. Like we get the front picture, and then there's stuff going on behind closed doors. The banks and institutions are not going to give up their control and power unless they have a new method of controlling and getting power. So, as much as Trump wants to, I think, push this, it's got to be the tangibility of people seeing the train's already left the station. It's kind of like with the dot-com era, right? Our worlds were very different before the internet. I
Yeah.
mean, a lot of younger people will never know what it was like not having to be on a 24/7 platform or things that can contact us in milliseconds.
Yep.
Remember, we had pagers. So I think what I'm feeling right now is if he's serious, and that's half the problem, is you kind of never know when he's serious and not serious. But if he's really going to support the technology, then it's going to create an urgency for these other companies to have to go there whether they want to or not. And so, I think it's inevitable. I don't know how this gets stopped. So it's like the same thing. Can we put the internet back in the bottle?
Right.
Never.
You know,
Right? I think the same thing's happening with digital assets, but people are getting smarter. The technology is getting better. They're starting to figure out how to utilize what the utility or tangibility is going to be.
right.
And I think the same thing, and I know you love always to quote him, but I think in by the end of the decade, and by the 2030s, I think you would see a Warren Buffett and a Charlie Munger investing in it only when they believe there's that tangible element to it.
Yeah. Well, if you heard what
And
happened today with Jerome Powell at the press conference, someone brought it up. He said,
yeah,
Are banks, ready for, are capable for this?" And Jerome Powell said, when it comes to digital assets and cryptocurrencies, the banks are absolutely ready for it. And once we're cleared, we're good for it. And I'm like, oh, wow, that would be a monster change and a big innovation. So,
I agree.
I mean, who knows what the next couple of years are going to hold? I, for one, am very excited. I think we're going to see a ton of different things grow and morph in this industry, and I think there's a lot of opportunity out there. What I will ask you now is your forecast. Let's get the Larry cast. I'll start you with the S&P. We got the SPX on the screen here, and I'll bring my spreadsheet up so we can.
Okay, I've got to look at it on my screen because I can't see your
You
screen.
can't
So
see my screen. Well,
SPX. Hold on a
SPX, yeah, that's what I'm looking at is the
All right, give me a
SPX.
second. SPX. So where we are right now, uh, I'm going to take a leap.
Oh boy.
Take a leap. All right. I don't know. So I'm going to be a little contrarian just from everything I've seen here.
Okay.
And I'm going to say that I could see us back at the 5,000 mark by the end of the year. That's more conservative.
Like
If we
5,000
get
even?
yeah, I think around 5,000.
Because I'm putting your number down as 5,000. Let me
Yep.
know if that's the number you want.
Nope, I think 5,000. And if it's really bad, because I see some demand around the area. So I'm thinking maybe it could get down to around 48, 5,000
Whew.
is where it might be. But then again, I'm banking into some of the things I've been seeing. So I may not be the best one, but that's what I'm going to go for is that I'm going to be a little more contrarian this year. And I thought it was going to happen last year and it wound up rallying.
Yeah.
But especially the last 2 months, and we're going to get a close on Friday, look at those wicks on the monthlies. So we're starting to see some supply coming in by those wicks. And we just need to get a downtrend initiated. And that's why I think we might find ourselves back around the 5,000.
All right.
And unless there's going to be some other things we're not anticipating.
That gives you an estimate of 14.99% down on the year for the S&P. And just to make you feel better, your cohort, Mr. Scott McCormick, is actually the lowest forecast of anybody of our audience or viewers, and even the podcasters.
Wow.
If you guys listen to podcasts, you can always email me your guesses and be a part of this list. You can email me at tradermerlin@gmail.com. Scott has a 4,800 target for the S&P. That's an 18.
That's what I said, 4,800 to 5,000, because if it goes beyond that one area that I'm looking at, we could see a bounce around 48,000. Yes, I'm actually in agreement with him, but I'm basing it on the following, that we're going to see more money being printed. We're going to be seeing tariffs coming in that is going to create some chaos economically. And I'm also going to bank on the fact that we've had history and that every time we've seen the bonds do what they've done and we now are not out of the problems yet, we're going to see potentially a drop. And by the way, right now, last time I looked, if you go to the US debt clock, our GDP to debt is at 122%. So that's disgusting to me. None of us would ever be allowed to go 22% into debt by anybody that didn't own a printing
We'd be
press.
arrested. You'd literally be
Yeah.
arrested.
And so right now, they're just printing money. And so at this point, they're going to have to offset enough to make up for the new initiatives they've just started. Because I think we're going to have a very large price tag on the deportation initiative. And again, I'm not talking from the standpoint of right or wrong politically, I'm talking economically. And it'll be interesting to hear Bill Addis's prediction. But last you and I talked to Bill, he said this looks like it's going to be the first year in history the Federal Reserve is in the red
Yeah.
as a
They've had some
corporation.
pretty significant losses here recently.
Yeah. And that is a turning point to me,
Yeah.
which means the Federal Reserve can't print enough to keep up with the debt. And it doesn't look like Washington's slowing down anytime soon.
Well, I'll tell
So,
you, Cynthia Loomis, she's on CNBC pounding the table saying if we buy Bitcoin, we can have our debt, half of it, within the next 20 years just by holding Bitcoin. I'm like, please, buy Bitcoin. Buy Bitcoin.
well, look, it's like anything else that we do in life. There's going to be some things that work and don't. The difference to me is that the people who are going to suffer are the ones that always pause and have to ask how much something
Yeah,
costs.
yeah.
The people who are going to be successful in life always ask, well, how much this could make, and are willing to take the risk because the potential is much stronger. And I think it's going to be the case. And the real question is, did people from 2008 learn to not listen to the talking heads when it does start to happen and look at the chart and make the best decision they can for themselves and not worry about what money they're going to make or lose, but make sure this doesn't turn into a tsunami of pain
Yeah.
if and when the markets do. Because if you even do a 15, 20% correction, that's still enough to get some great picks when it ends in stocks because it doesn't have to be a crash, a 20% correction. Warren Buffett was buying after the COVID crash.
Yeah.
Yeah.
I'm
So no, it'll be an interesting year like anything else. It's fun from the perspective of now that I'm freed from all the biases that we were taught growing up, I can just look at a chart, it's just me and the chart, and decide, do I like what I see? Am I willing to take action? And if not, no one to blame but myself.
and my last piece here, my computer just acted all of a sudden very, very strange. It was not giving me any symbols. I didn't want to go an hour, but here we are. For some reason, it's not allowing me to bring up Bitcoin or anything. My charting package is a mess right here. So, Bitcoin, where do you think Bitcoin will be by the end of the year?
I leave that to you, the master. I
You
really
can
do.
always have a hypothesis.
Well, but here's the thing. Again, it depends to me on who's going to be backing the initiative. If we have deep money and they're going to go large, then we know there's going to be a strong rally. So the question, maybe the better question for me is, am I buying right now in anticipation of that happening? And yes, I am, because I think there's more upside to it than downside. It's like everything that was restricted that gets lifted, you can't put back in the bottle again. And we learned that with the 20s when they decided that crazy thing of prohibition, and it wound up causing more harm than the
Yeah.
people that were drinking to begin with, right? And crime and everything else. So I am going to say, I think, depending upon what we're hearing, we could see an upside, and I'm excited about it,
No
right? And
guesses?
then,
You don't even want to throw a guess out there?
you know, I haven't been in this long enough to be able to analyze it other than me doing something here. So if I was going to do it and let me just come in here and get
Because you
my,
could win yourself some Trader Merlin shot glasses. Because I know you're such a heavy boozer. You can have like shots of
yeah, I
Metamucil.
am. All right, so here we go. Ready? This is what I'm going to say from what I see right now. And again, don't hold me to
I'm
this.
gonna write it down, so obviously I'm holding you to it.
All right, hold on. So this is kind of what I'm seeing. And let's see.
I'm seeing.
Hold on, I got to get the price here. I'm going to say we're going to hit somewhere, ready? All right, this will be my prediction.
All right, let's do it.
I think we're going to get to, I'm going to give it half. I'm going to split the half. 155,000.
155. All right, you're right there with Big Eb. You nailed it. You're the same as Big Eb. You got great minds think alike. Let's see, Larry.
There we go. That's what I would consider.
All right. Well, I'm going to put you on the list, and it's all just a guess at this point, anyway, right?
And if you lose, will you get a free dinner at Benihana?
No, I don't. I'm paying the winner. That's all I'm doing. I'm paying one person. Well, and if it's a tie, we might be in trouble here. But Larry, tell me about your team. What's that?
Yeah, okay. I was going to say what I'm really excited about this year is I'm really hoping our students are going to be prepared to make a lot of money. I'm hoping for that. And if they lose, they take small losses. So it's about this could be the year. If there was a year to get serious, this is the year to do it. Put in the time, practice, do some simulation, and get yourself to that starting line that if something does happen, you're not afraid to push the button.
Nice. Well, I'm glad you came on the program. I have a bunch of questions coming through here for you, but I got to wrap up so I can get out of here before a 1-hour show, which is going to be a miracle if I do. But again, Larry, as usual, thank you very much for coming on. Maybe we'll get you on next month and field some more questions for you. But appreciate you coming on. Thanks for all that you do.
Great. Thank you, guys, and hopefully see you soon.
Oh, you're out here. You're out here. You're teaching in Irvine this weekend, right?
Yeah, I'm teaching Irvine. Basically, my month is insane. I will be in Irvine the first week of February. I'm going to be doing a class in Denver the second week of February, and I'll be teaching in New Jersey the end of the month.
All right.
So I'll have 1 week off where I'm not teaching. Yep.
Perfect. All right, Larry. Thank you very much. I will talk to you soon, my friend.
Take care and happy 2025.
Happy 25, everybody. All right. I will do my best to field those questions here, but I wanted to kind of wrap up before we get to an hour show because I have just so much other stuff going on. Chio wanted to know, what typically is the end of the inversion to the time that we start the crash. From what I've seen, 9 to 18 months, which is interesting because if you look at the inversion, so that's, 9 months is a while, but let's go look at that inversion real quick if my computer lets me do it. When did we really uninvert here? I would argue we uninverted back in September. So go 9 months out from September, that's going to be September, October, November, December, January, February, March, April, May. That's starting in May, which in my opinion kind of lines up with my forecast of a weakening economy going forward. Now, again, it had nothing to do with the yield curve, but that's just one extra element that leads me to believe that the tail end of this year might be a little bit weaker than anticipated. I mean, again, we're not saying crash, but just slowing down. So there we go. And if you are in Irvine, maybe you can contact the local center if there's spots available. Take a class with Larry. He's always fun to take some classes with. All right, hopefully this doesn't crash on me as I do this. I don't know why my computer is giving me grief, but I will try to wrap this up very quick. From a technical perspective, crude oil came right back down and broke below that little zone. This is not a good thing. I was anticipating a bounce. I really thought we'd see a nice little move up here. Disappointing that we didn't get it, but remember, the intermediate to longer term, I thought it was oil is going to go much slower because of drill, baby drill, and this may just be the beginning of that. So now at this point, your target on crude oil is about $69, which is that area of kind of sideways action from late December of last year. Your S&P 500, well, it tried a little bit today. It was moving up, but if you look at the last 3 days of candles, they're getting more compressed real bodies, so that's just pressure. No one really has a clear feeling on direction. One thing that I will take from today is you have the bottoming tails over the last 3 days have been getting shorter and shorter. That's a positive sign that buyers aren't letting it fall as much, even though it's not really breaking out to the upside. This does, at least from just this last 3 days, lead me to believe you're going to get more upside pressure here because the buyers have been stopping this thing from falling further. And that's the same situation over here with the NASDAQ, where we're seeing those bottoming tails get higher and higher. So even though we're down today, 0.27, it does feel like we are seeing more strength coming into the underlier. Russell 2000, not the same picture. Notice its tails have been pretty much the same. Even today was even slightly lower, showing a little more weakness for the Russell 2000. It was down 0.23%. Our 10-year yield, this is not good. We have that pattern drawn out there, which is that head and shoulders pattern, and we're hesitating right at that neckline. This really does feel like we're going to see this 10-year drop. If this 10-year does drop, well, that would line up with the equity markets rallying. Cheaper yield means cheaper cost of capital for businesses, and that should be a catalyst for our markets move to the upside. Yeah, markets waiting for Jerome. Well, they got Jerome's statement. They got his stuff, and we'll see what the follow-through is here. Dollar index unchanged, really. Nothing to see from a technical perspective, although it's kind of a slight little shooting star, which would imply that it's going to move down mañana. And our last two, you had gold was up 0.08%, so really just pushing higher towards these all-time highs, and I think you'll probably see it break. My guess is by next week we'll be at all-time highs. And then, of course, Bitcoin with a nice little move to the upside. The big takeaway here for anybody who is, like myself and positive on crypto, you just notice how it hasn't been really making any new lows since November. Even though it's not ripping to the upside, it's holding, and that's a very positive sign. Seeing this nice up move today, it does make me feel like you're going to start to hear more from President Trump on a strategic Bitcoin reserve. Cynthia Loomis, who has now been given a large degree of power on her Senate subcommittee, I think that she's going to end up pushing this one through. Now, it won't happen in the next week or two, but I think the talk track's going to be much more bullish on Bitcoin over the next coming weeks, and we will see this thing at all-time highs probably within the next week or two. So it should be pretty darn good. That said, let's look at your earnings calendar, and it's going to be another 1 hour show. I just did not want to do it, but here we are. Here's your earnings on the day. Maybe we can dive deeper into these on tomorrow's show. But you had Microsoft. They beat earnings and are actually down 1.5%. Meta shattered earnings. They're supposed to make $6.68 per share. They came out at 8.02, and they're only up 0.25% right now. And Tesla, they missed earnings and are up 3.75%. Go figure. I mean, what's the rhyme or reason out here, right? Here's Tesla, right? As you can see on the earnings, Tesla missed by 2 cents. Supposed to make 75, they came out at 73, and right now they're up at $419. They closed at 389. So just bizarre. I don't have time, Big Eb, to get to all the numbers on him and dig in. I haven't had a chance myself to look at them. I'm just looking at the high-level pieces here that they actually beat their earnings outright. I'd like to see what was said from Microsoft because they had a very nice earnings beat, and MSFT is down right now, trading at $420. That's almost a 5% slide in the after-hour session. So I'd like to know what was said here to cause the negativity. My guess is probably something to do with AI. I was listening to a tweet from Colin Teddards, which you guys follow him on Twitter. It was a great tweet talking about how Microsoft says that they're going to spend $80 billion this year on AI, and they have spent, $30 billion, which means they got another 50 to go by the end of the year. So it's kind of timing it. A lot of money being pushed into AI, so I really want to see what the comments were said. But this is why I don't like to trade earnings, because you'd be like, oh, Microsoft's doing great, and boom, they missed earnings, or they beat earnings, and stock is down. And then you have Meta, which is just all-time highs. Right now, we are in uncharted territories. Never been at this level. That's right up here. It's $686 in the after-hour session. Pretty damn amazing. All you have to do is say you are investing millions into AI, right? Well, millions would be shortchanging them. It's billions for these guys. Tens of billions. They said 80 is what they're going to be doing for this, Stargate package, Stargate thing, which I think changes with Elon, with DeepSeek. As far as economic calendar, let me bring that one up because I'm already already late on my show here. We're 3 minutes over time. Here is what we had happen today. Obviously, we had our rate announcement. We kept right where we are at for the U.S. markets. Canada, right where they're expected to do with drop 25 basis points. Tomorrow, you have a few big announcements, and that's going to be a rate announcement for the EU. So if you're trading the euro, you have a 25 basis point coming. That's going to happen at 5:15 in the morning tomorrow. If you are trading the U.S. markets, you have GDP numbers coming out, unemployment claims. You also have pending home sales and natural gas storage. So quite a bit coming out tomorrow. And that, my friends, will do it for me for today. Now, for tomorrow's show, as we've mentioned many times, we're going to have Bill Addis on the program. I actually have my little graphic here, which I should probably bring up and have up the whole time when I do these. But let's break. Why is it full screen? There we go. There's my graphic for tomorrow. The 30th, we've got the Bond King, Bill Addis, will be joining us, of course, tonight. I will be sitting down and watching the whole press conference as I was in meetings and only got to see part of it, but I'll give you my rundown of what happened in the press conference, and I certainly want to know what Powell has to say about Trump's policies, because remember, Trump is demanding that interest rates drop. So tomorrow, Bill Addis, if you guys have comments, questions, things you want me to cover with Bill, I'd love to hear it. TraderMerlin@gmail.com is the email to send me questions. That said, I hope you guys have a fantastic remainder of your day. I'm going to go do a whole bunch more work and get ready for tomorrow's show. We'll see you guys tomorrow. Take care.